Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, January 30th. And we got a bit of economic news release scheduled for today, but this week's going to be pretty packed with a lot of data here this week, a lot of high impact stuff going on. So be prepared for a pretty volatile week. And then also tomorrow we got the first day of the FOMC meeting, so they'll have a two-day meeting, which will give their announcement on Wednesday. Now, they aren't expecting, it's almost basically a 0% rate chance that they're going to raise rates, but that meeting might give us some insight as to when they plan to release those rate hikes, because they were basically expecting approximately 3 rate hikes this year, and when those might take place. Last couple of years, of course, last 2 years have been in December, but we could potentially have one maybe as soon as March, or maybe might wait later on, closer to summertime. So those would be kind of important to investors to kind of get a better gauge as to when the dot plot when they plan to start hiking this year. So let's get into the data here. We do got personal income for the month of December. So back in November, we had a pretty light one. People only went up, increased about 0.1%. Forecast was supposed to go up to 0.4. It went up to 0.3, a little short of expectations, but it still went up to 0.3%. On the other hand, we got consumer spending. So instead of making more, you're spending more. We had a 0.2% increase in November, and came in expectations at 0.5% increase for the month of December. So this is one of the highest we've had actually since I think it was 2011. We've had this, so it's a good number there. Obviously, we had Christmas time, people spending, so that's obviously good that people were spending money to keep the economy moving along. Now we got core inflation. So November was basically 0, and the month of December the forecast was supposed to be at 0.1%, and it came right at forecast. So what that did is it brought our year-over-year core inflation, this is the PCE, or personal consumption expenditure, and the Fed's favorite gauge, from 1.6% to 1.7%. So it brings us a little closer to the 2% range that the Fed is looking for. So obviously we want to keep an eye on that to see if that keeps going up closer to 2% or if it's staying. We had it bounce a few times over the last few years up to 1.7, and it'll drop back down to 1.6. One thing that could potentially keep that low is the high dollar value. So the dollar's been worth quite a bit. It's almost on par with the euro now, and Great Britain, I think it's just over a little, within 120 or something like that. So it's so the dollar's gotten pretty strong to a lot of the other currencies. So that could help keep inflation here more in check. Even though for the most part they like to bring that dollar weaker a little bit, just so our cost of goods would be easier to sell overseas rather than just here. And plus, it gives companies a little bit more flexibility if they need to raise prices over the course of the year and stuff. Last but not least, we got the pending home sales for the month of December. So in November it dropped 2.5%, and in December it went up 1.6%. So let's go and take a look here at the headline news. And the stock market's taking a pretty big beating today, especially the Dow. Dow at one point was down 190. And of course, they looked at the data, but the big one actually is just coming in Trump's travel plan. They're kind of reacting to Trump's sudden, over the weekend, his sudden plan to temporarily ban 7 countries and then indefinitely suspending the Syrian refugees from coming over here while they work and create that vetting process. Of course, you might be asking whether some countries came up for. That was a list that Obama had, his administration had came up with that list, and then they just went ahead and implemented it so that way they can work on more of a secure vetting, so that way protect American people from what we've been seeing in Europe. So hopefully we don't expose ourselves here in the U.S. here. Of course, we've had a pretty big backlash on there. A lot of people out there protesting and such. So let's kind of move on so we're not getting into politics here, as this video is not meant to be more political. But here's where we want to look at our mortgage-backed securities here. We do have we are up about 9 basis points, so not quite enough to be better price, but a lot of lenders may give better pricing because they didn't really give a price improvement, as it did kind of improve on Friday a bit here when it closed above the floor of support here. Remember, we started off down here, we shot up here, so that was a nice little rally we had on Friday, and now we're going up against the 10-day moving average. The big one, we have some room here until we hit that resistance, and at that resistance we have what you can see, the 50-day moving average, and that one's been a kind of a tough nut to crack. Seems like every time we get up towards the 50, as you can see right around here, we've been shot back down. So we'll start up here, we get down to the 50-day, we start here below the 50-day. Here we start a little bit above and close, just slightly above it, and then of course we just drop. So the 50-day moving average has been a pretty tight, tough one for us to crack, and it could continue that way. So just be careful about volatility. I mean, this the concern about the travel ban, it will be probably short-lived. Usually these are reactive, emotional-based type of trading. So they're just kind of concerned what the ramifications of this might be with our relationships with other countries and such. So anyways, but these are typically short-lived, and then the stock market will go back to what the data is on there. Plus, of course, we got the Fed starting tomorrow with their announcement on Wednesday. All right, so pricing's about the same or a little bit better. You'll see today on interest rates, which is obviously a good sign for those who are looking to buy a home or refinance on their mortgages here. So that concludes, but if you guys want to get more data throughout the day that we did cover on the video here, I do post on Twitter underneath my account here at Mike Bjork. Feel free to find me there and get your latest updates. Have a wonderful day. Thanks so much for watching. We'll see you guys tomorrow. Take care.